Hello everyone, my name is Michael Robillard. I am that crazy guy on YouTube teaching people how to succeed in the stock market for free. That is right. I am teaching people how to succeed in the stock market, and I'm not charging you a cent to do it. Why am I doing that? Many people have asked me that question, and my number one answer is I'm making my own money. So I don't need your money. I just want to see you making money with me. So why spend your money on these Jason Bonds, on these Tim Sykes, on these trading warriors that charges hundreds and thousands of dollars for the exact same value that I'm giving you right now just for your time? That's all I want, is for you to learn from what I am teaching you and become a great trader in the stock market yourself. That is all the pay that I'm looking for. Well, folks, I wasn't planning on doing a part 2 to the art of swing trading with Thinkorswim, but after I did my first video, a whole lot of people had some questions. And these questions led me to believe that I need to expound on my strategy for swing trading. So here we are with part 2 of the art of swing trading with Thinkorswim. Once again, got a lot to go over, so we're gonna go ahead and get this ball rolling with the disclaimers. Yes, please take your time to read these disclaimers. Everything I do on these videos, everything I teach you is for educational purposes. If you are going to take the stock market seriously, please take the time to evaluate your finances. All right? Very important. Very important. Evaluate your finances, because there are risks in the stock market. I'm not gonna blow air up your butt. I'm telling you the truth. A lot of people lose money in the stock market. My goal is to show you how not to lose money in the stock market. But even with what I'm teaching you, there's gonna be a learning curve. So be ready. Be ready if you are serious about this. Definitely take the time to pause, read through the disclaimers, and we're about to get this show rolling. Okay, so before we go any further, last time in my last video I showed you my technique for swing trading, but I didn't really get into the mentality of it. Okay? When you're looking at swing trading or any type of trading, there are 2 foundational things that you have to take a grasp of, take a hold of for any trade that you do. All right? The very first thing that you want to look at is how much money you're willing to lose. There is a risk. Every time you go into a position, there is a risk. All right? I've said this before, and I'll say it again. The stock market is ran by a mob. A countless number of people worldwide that are all trying to make money. Okay? I can't tell you how many people were in this candlestick here. Could be in the millions, trillions, billions. I don't know. I just don't know. You know? All I know is that everybody that was in and out of this candlestick here was all trying to do one thing: make money. That's all I can tell you, right? So, with that in mind, before you even look into a stock or a forex or whatever commodity you're looking into trading, the very first thing you want to do is determine, okay, how much money am I willing to lose of my money going in? You don't want to go 100% on any trade. Now, I know some people in the very beginning, that's what they do, because they feel like that's how they can grow a small account quicker. You know, if you choose to do that, that's risky. I'm not gonna discourage it. You know, because as they say, high risk, high rewards. You know, but just make sure that you are mentally prepared to lose everything if that's what you're gonna do. Okay? Make sure that you are mentally prepared. All right, because there is a strong chance that you're gonna lose everything. You know. So let me look at. Actually, you know what? Let us look at a trade I got into yesterday. Perfect example. CANE, C-A-N-E. This is an ETF that I got into yesterday. Now, I'm not planning on getting out of this for at least another week or two. All right? That to me is considered a long swing trade for me. Right? So, why did I get into this trade? Well, going back to my 4 hour, right? I came in yesterday in this candlestick. I saw that the cloud, my indicator, is showing me that this is about to go up, right? So the first thing I did was say, okay, how much money am I willing to put in this? Now, when I did my calculations with the money that I have, I could have bought almost 500 shares of this if I wanted to. But of course, like I just said, I never go in all with all the money I have. So I went with 200 shares, right? And you can see that here. That's my position, 200 right here. And what made me decide to jump in with 200 was because I looked at it and I said, okay, how much am I willing to lose on this ETF? My number, before I even had a number of how much money I want to make, I already had a number of how much money I want to lose. I'm willing to lose. Not that I want to lose, but I'm willing to lose. And that number was $150, which is why I did 200 shares, right? That's roughly a little bit above, or a little bit below 10%, which is usually around where I'm at with my losses. So, in other words, while I am in this stock, if this number here, if this profit loss drops to 200, you see this little bracket here, like this here, I'm in the negative $31. Yeah, when you see these brackets in Thinkorswim or anywhere, that means you're in the negative. All right. When you don't see the brackets, that's the positive. So you can see here I'm positive 8, 22, 21 with Apple, right? This one I'm positive $2. That's okay. This is an ETF. ETFs move differently than regular stocks. They don't move as quick. They're not as volatile. So at one point today, I think it was up $20. Now it's down to $2 with like 3 minutes left before the market closes. That's okay. ETFs, that's how they move. So knowing that, I'm okay with that. Now, if it gets to 100 and then there's brackets, then that's when I start thinking, okay, I need to jump ship. All right? So, very important, very first thing is how much money am I willing to risk on this trade, right? And the reason why it's important to have that number, folks, is because it kills the emotion. All right? Most of the people that are in this trade are motivated by one of two emotions. They're motivated by either greed or they're motivated by fear. All right? Those are the two most powerful emotions in the stock market that kills most people's profits. By having a set number, I curve that fear. By having a set number of this is how much I'm willing to lose, it doesn't matter how I feel about the stock. When I reach that number, I jump ship. It's just that simple. All right? That is the basics of risk management from what I can explain to you. Now the next part that should be a foundation of every trading decision that you make. Number one is risk management, knowing how much money you're willing to lose. And the second is high probability. This is where your mind needs to start having a paradigm shift towards looking at things from a probability perspective. For example, Apple. Last year in October, it did a 1-4 split, right? Before it did its 1-4 split, Apple's stock was somewhere around the low 600s, high 500s, somewhere around there. After the split, it dropped down to like $110, right? Now, if I were to sit there and tell you, looking at Apple and the way the corporation is, what are the chances of this stock, which is, oh, there goes the market closing for the day. What are the chances of this stock that is right now at 127.90? What are the chances of it getting back to that 600, low 600, high 500 range within the next 10 years? Most people would say the probability of that is very high, right? That's probability thinking. Now, when you combine that with multiple things to support the high probability, the probability of it going in that direction, now you're dealing with high probabilities. Okay? Let's go back to my stock that I got into yesterday, or my ETF, Kane, right? Which actually closed, it was $4. It was $4 when I started the video. Now it closed today at $6, right? Why did I go into Kane? Number one, I saw that my cloud was changing green. That's one. That's one for the probability of it going up. Okay? 4 hours. But I don't just look at just one time frame. Okay? I don't look at just one time frame. The other thing I look at is the RSI. Where is it in the RSI indicator? If this line was up here, I would not have gone in. Or if I did go in, I would be looking to buy a put option on Kane, which I don't even know if this has. Well, yeah, it does. It does have a put option. Excellent. I would have looked at coming over here then and buying a put option on Kane. And the reason why is because when it goes above this line here, it's not going to stay up there for long. It's gonna go down. It's just a matter of time, but it doesn't stay up for too long. It will go down. Let me give you some examples. Look right here. See? It broke over that line, broke over this line. It went down. Kind of touched the line a little bit, and look at that. So if I did a put option for, let's see, how many days is this? 1, 2, 3, 4, 5 days put option contract, I would have made a whole lot of money on this thing going down. That is a high probability. The fact that it is up there, that tells you that it is definitely going down. Same thing in reverse. If it had broken below this line here, that means it's gonna go up. Another high probability. So what I'm looking for is multiple things that tells you that the stock is about to go in a certain direction. Multiple things. I just mentioned two things. One, my cloud indicator, my 10 and 20 Hall moving average with the cloud indicator, right? Actually, that's 3, but I usually look at that as 1. This little arrow here, which is from my TTM scalper alert, telling me, okay, this stock is on its way up, right? It would be nice if I had the green one here, but this one I don't really count because it's too far out. If there was if a green one was here, then yes, that would have been another perfect indication, right? So I'm looking at multiple things. Now here's what separates the rookies from the pros, right? This is a 4-hour chart. Now I'm gonna switch to a weekly chart. Why am I switching over to a weekly chart? Because I want to know what the stock is doing on a weekly basis. Where it's at in the week. Not in the 4 hours, not in the day, but in the week. What's happening? So yesterday, I noticed that it was at a point where it was about to level off from its dip that it's been doing. And so far, I'm correct. It's leveling off, which means that soon this red cloud is going to turn to the green cloud. It's going to start going up. The other thing that I looked at, once again, looking at my RSI, yesterday I already saw this already starting to go up, which told me, okay, this is another sign that this stock or this ETF is about to go up, right? This is what high probability, searching for high probability trades look like, folks. So I'm looking at that. Now the MACD doesn't really give me much because the lines are so close, so I have to do this. And also, this is another thing. Look at how close these two lines are. You want that. You want that. Now the MACD, once again, it stands for moving average convergence divergence. It's an acronym for moving average convergence divergence, right? So this is the average of where the stock is going. This is the convergence right here, right? When the blue line is above the yellow line, that means the stock is bullish. When the blue line goes below the yellow line, that means it's bearish, right? So what I'm looking for it to hit the bottom or close to the bottom, and it's gonna start going up again. So I'm looking for this line to be at a point where it's gonna level off and start going up above this yellow line. And I took the risk that this was giving me the indication that it's going in that direction, right? So this was something else. Now, ideally, it would be beautiful. It would be beautiful if everything was pointing in the right direction. If I came in to this where this indicator was showing, it was already above, it was already below the line here on the RSI, everything is pointing, heading up. This would have been a beautiful, around here, probably would have been a beautiful time to come in. Would have made a lot of money, right? Would have made some good money. You wouldn't have lost money, right? So these are the things that you look for to get a high probability trade, all right? Now, when you have a whole bunch of these things working together, chances are you're gonna make money. Now, I say chances are, because once again, all of this is controlled by a mob. and no one can control a mob. No one can predict a mob. Don't try. Just go with the high probability. Now there are other things you can look at as well. You know, if I wanted to, I could have clicked on the news and saw and see if I could find some good news for the day on this particular ETF. See, look, that's some pretty good news. Food for thought. This person here, Trading Sal Gilbert's, focuses on agricultural ETFs. This is definitely an agricultural ETF. Sugar funds and corn fund, quarantine. You know, these are some news that we can look at. This was on March 1st. Yeah, a little bit. Now, if there was like a whole bunch of news today, let me see if I can get an example here. Here we go. Look at this. This one particular stock. I'm not looking into it because it's so low. I'm not sure if this is a penny stock or not. Yeah, it is a penny stock, so I'm not even gonna really put too much time into it. But look at this, good news. Guess what? Good news usually moves a stock. Not always, but usually does. Right? That's another thing that you can look at for high probabilities. Right? Now, okay. So I'm using the 4-hour Heikinashi chart, right? I'm looking at a week to see where it is in that week. What's it doing ultimately to know if I want to go in or not. Now, when do I actually jump in? That is where I use my 3-minute indicators. Looking at the stock on a 3-minute level, sometimes maybe even on a 1-minute level, right? Obviously the market is closed now, but you know, just giving you an example, right? Now, let me ask you this. Have you ever been in a situation where you looked at a stock, it looks like it's going up, everything looks like it's doing good, but the moment you jump into that stock, it starts going down. You start losing money. Why is that? What I just showed you, just using 3 different time charts, is a way to avoid that. Is a perfect way to avoid those scenarios. Right? A lot of people talk about support and resistance. When to jump in on support and resistance, I often say it's when you are using anything from a 5-minute to a 1-minute chart to determine when is a good time to come in. Because it's very disheartening to jump into a stock and immediately start losing money. I've fallen for it. Many rookies have fallen into it. It's just a part of the learning curve. But when you learn to use different time frame charts, you can avoid that. Right? I could have just stayed on a 1-minute chart and just waited to see when the indicators are saying that it's going to go up, and then jump in. And in that way, I'm already in profit as soon as I get in. Well, folks, this is it. This is all I got for you today for part 2 of the art of swing trading with Thinkorswim. I hope you enjoyed this. If more questions come, I will do another video. But I think that pretty much covers everything on my swing trading technique. Folks, if you found any form of value in this video, spread the word. Get people to subscribe to the YouTube channel. Join us on Facebook, MeWe Wimkin. The goal for Evolving Traders is to see you evolve not only as a trader, but to see your bank account evolve from living paycheck to paycheck to being financially stable to being financially healthy to being rich to being wealthy. That is the goal with Evolving Traders. If you have questions, my email is right there. Email me. Post comments on the video. This is it. That's all I got for you today, folks. I hope you enjoyed what I shared. I hope you have a great day. And like I said, coming up next, I will most likely be doing a video on introduction to options trading. Options is a very fun product, a very fun commodity to trade in the stock market. You don't want to miss that. So make sure you hit that alert button down below so that you can stay up to date with all the videos that I post. Folks, once again, my name is Michael Robillard. This is the Evolving Trader, and I hope you all have a great day.